It's aloha.
Well, aloha! Here we are. It's Friday. Well, aloha. Like I said, it's Friday. It's now May 23rd here in Southern California, and it's warm. Um, the weather's going to cool down a little bit, which is good because we need a little cool down. But yeah, can't believe we're actually towards the end of May, and next weekend, I think, is the start of June. Can you believe that? Wow, this year is just flying by. So let's talk about some real estate. I'm, you know, if you've been house hunting lately, you've probably felt the sting of today's mortgage rates. And it's because of those rates and raising home prices that many home buyers are starting to explore other types of loan to make those numbers work. And one option that's gaining popularity is adjustable rate mortgages, or ARMs. Now, if you remember the crash in 2008, some of you probably may or may not, depending on how old you are, this may bring back some concerns, but don't worry. Today's adjustable rate mortgages aren't the same. Here's why. Back then, some buyers were given loans they couldn't afford after the rates adjusted. But now lenders are much more cautious and they evaluate whether you could still afford the loan if your rate increases. So don't assume the return of ARMs means another crash. Right now, it just shows some buyers are looking for creative solutions when affordability is tough. Now, data from the Mortgage Bankers Association said that most people are opting for ARMs right now. More people are. And while adjustable rate mortgages aren't right for everyone, in certain situations, they do have their benefits. Now, let's look at how an adjustable rate mortgage works. Here's how Business Insider explains the main difference between a fixed rate mortgage and an adjustable rate mortgage. With a fixed rate mortgage, your interest rate remains the same for the entire time you have the loan. That means you keep your monthly payment the same for years. Adjustable rate mortgages work differently. You'll start off with the same rate for a few years, but after that, your rate can change periodically. That means that if the average rates have gone up, your mortgage payment will increase. But if they've gone down, your mortgage payment will decrease. Of course, things like taxes or homeowners insurance can still have an impact on a fixed rate loan, but the baseline of your mortgage doesn't change much. Adjustable rate mortgages don't work the same way. Now, the pros and cons of an adjustable rate mortgage. Here's a little more information on why some buyers are giving adjustable rate mortgages another look. They offer some pretty appealing upsides, like a lower initial rate, because adjustable rate mortgages rates are typically lower than fixed mortgage rates. They can help buyers find affordability when rates are high. With a lower adjustable rate mortgage rate, you can get a smaller monthly payment or afford more house than you could with a fixed rate loan. On the flip side, just remember, if you have an adjustable rate mortgage, your rate will change over time. And as Barron's explains, there's the potential for higher costs later. Adjustable rate loans offer a lower initial rate, but recalculate after a period. That is a plus for borrowers if rates come down in the future, or if a borrower sells before the fixed period ends. But it can lead to higher costs if you hold on to your home and rates go up. So, while the upfront savings can be helpful now, you'll want to through what could happen if you're still in the home with your initial rate ends. Because while projections show rates are expected to ease a bit over the next year or two, no forecast is guaranteed. But why it's essential to talk with your lender and financial advisor about your options and whether an adjustable rate mortgage aligns with your financial goals and your comfort with the risk. Bottom line, for the right buyers, adjustable rate mortgages can offer some big advantages. They're not one size fits all. The key is understanding how they work, weighing the pros and cons, and thinking through if they should be something that could work for you financially. That's why you need to talk to a trusted lender, which I have trusted lenders, and talk to me, your trusted real estate agent. I will be happy to help you. My contact information is below in the comments. So, by the way, Memorial Day weekend. Have a good one. 3 days. Traffic's still going to be a little crazy this afternoon, but it should be a beautiful weekend. So go out and enjoy it. I think they opened up PCH for public. Public can get through it, so you can get up to Malibu, and the beach is up there. Well, call me if you want to. And it's Aloha Friday. No work till Monday. Well, of course, retail sales, you're in hospitality, or you're in real estate, and then we're working this weekend. All right, well, you have a great weekend, and enjoy the time off. Go look at houses. All right, aloha now. Bye-bye.